Bitcoin made a new high above $69,200 on March 5, but then succumbed to massive selling, which pulled the price below $60,000. This capitulation caused $17 billion in cross-crypto liquidations, according to monitoring resource Coinglass. However, the fall did not deter the investors from buying the spot Bitcoin exchange-traded funds. Data from Farside investors shows a net inflow of $648.9 million into Bitcoin ETFs, with BlackRock's iShares Bitcoin Trust ETF recording its highest inflow of $788 million. This shows a solid appetite for Bitcoin, and if it is maintained, corrections are likely to be shallow. When the markets are rising sharply, the traders tend to throw caution out of the window and take on too much leverage. That is a quick way of making a money in the near term, but it could damage the portfolio if traders are not adept at booking losses when they are small. Therefore, traders should remain cautious and follow trading rules when using leverage for trading. And could Bitcoin extend the uptrend, pulling the altcoins higher, or will the cryptocurrencies enter a consolidation phase? Let's analyze the charts of the top 10 cryptocurrencies to find out. Bitcoin has been in a strong uptrend for several days. Traders view the dips as a buying opportunity during an up move, and that's what happened on March 5th. The bulls aggressively purchased the drop to the 20-day exponential moving average, indicating solid demand at lower levels. Buyers were trying to resume the uptrend by pushing the price above $69,000. If they succeed, the BTC USDT pair could start the next leg of the uptrend to $76,000 and then $80,000. Time is running out for the bears, and then they'll have to guard the $69,000 level and yank the price below the 20-day EMA if they want to start a moving correction in the near term. The pair could then witness long liquidation and nosedive to the 50-day simple moving average, $49,107. Ether jumped above the $3,600 resistance on March 4th and tried to extend the uptrend on March 5, but the bears had other plans. Strong selling pulled the price down to the 20-day EMA, where buyers stepped in to arrest the decline. This suggests a positive sentiment where the bulls are defending the 20-day EMA. The bulls continue buying and are trying to maintain the price above $3,822. If they manage to do that, the entire market USDT pair is likely to start a rally to $4,000 and thereafter to $4,150. If bears want to prevent the upside, they will have to drag the price below the breakout level of $3,600. That could deepen that pullback to the 20-day EMA, which will be in danger of breaking down. And BNB turned down from the overhead resistance of $427 on March 5th and plunged below the 20-day EMA, but the bears could not sustain the lower levels. The bulls bought the dip below the 20-day EMA, as seen from the long tail on the candlestick. Buyers are trying to strengthen their position further by maintaining the price above $427 on March 6th. If they do that, the BNB USDT pair could rally to $460. Well, contrary to this assumption, if the price fails to sustain above $427, it will indicate that bears are defending the level with all their might. That will increase the right likelihood of a fall to the 50-day SMA and just clear. Now, what that means to adjust $341. And Solana reversed direction from the immediate resistance of $143 on March 5th and fell to the 50-day SMA, $105, $5. So, however, the long tail on the day's candlestick shows that the bulls are aggressively protecting the 50-day SMA. The bulls have pushed the price above $126 and will again try to overcome the barrier at $143. If they can pull it off, the Sol USDT pair could start the next leg of the up move to $158. Instead, if the price turns down from the current level or the overhead resistance, it will suggest that the bears are not willing to give up. The pair may safe in the chamber, then again, slide to the 50-day SMA. XRP turned down from 67 cents on March 5th, indicating that the bears are fiercely defending the level. The price rebounded off the 50-day SMA 0.55, signaling that the bulls continue to buy on sharp dips. The XRP USDT pair will make one more attempt to clear the overhead hurdle at 67 and start journey to 74. On the other hand, the bears will again try to defend the $67 level. And if they do that, it will indicate a range-bound action in the near term. That pair may swing between the 50-day SMA and 67 cents for a few days. And Cardano turned down from 80 cents on March 4th and plummeted to the 50-day SMA, have never found on March 5th. Now, we don't want to fix with all those. However, the bulls aggressively bought the dip near the 50-day SMA, and the price recovered to close above the breakout level of 68 cents. This shows a bullish sentiment among the traders. If the price rises from the current level, the ADA could reach the overhead resistance of 80 cents. This positive sentiment will be invalidated if the price turns down and closes below the 20-day EMA, 65 cents. The pair could then slump to the 50-day SMA. Its Dogecoin rose above the 16 resistance on March 4th, but could not sustain the breakout on March 5th, indicating profit booking at higher levels. The bulls are again struggling to maintain the price above 16 cents, indicating continued selling on rallies. If the price turns down from the current level or the overhead resistance, the DOGE USDT pair may slump to the 20-day EMA, 12 cents, where buyers are likely to step in. And contrarily, if buyers sustain the price above 16 cents, the pair could gradually retest the local high at 20 cents. A break and close above this level could signal the start of the next leg of the uptrend to 30 cents. That Shiba Inu has been in a strong bull run for the past few days. The bulls propelled the price to $45 and $45 on March 5, but could not sustain higher levels, as seen from the long wick on the candlestick. That started a wave of selling, which pulled the price down to 2500250. And a minor positive in favor of the bulls is that the lower levels were purchased aggressively. This shows solid demand on dips. After the large range day, the SHIB USDT pair may remain range bound for a few days. The boundaries of the range could be 0.200025 on the downside and 47.45 on the upside.
The deeply overbought level on the RSI also warns of a possible correction or consolidation in the near term.
The failure of the bulls to start an uptrend after completing the inverse head and shoulders pattern in Avalanche could have led short-term traders to dump their positions on March 5th. The AVAX USDT pair plummeted below the 50-day not everyday SMA, but a minor positive is that the bears could not sustain the lower levels. Solid buying started a recovery, and the bulls are trying to push the price back above the overhead resistance of $42. If this level is cleared, the bulls may again face stiff resistance near $44. A break and close above $44 would be the first indication that the bulls are back in the driver's seat. The pair may then retest the psychological resistance at the $50. The 50-day SMA and $35 are the two crucial supports to watch on the downside. And Polkadot soared to 1076 on March 5. Their profit booking set in, as seen from the long wick on the DOGE candlestick. The bears pulled the price below the 20-day EMA, but the long tail in the candlestick shows that lower levels continue to attract buyers. The bulls have pushed either on the price above the breakout level of $9.59. If they can sustain the higher levels, the DOT USDT pair could rise to the overhead resistance of $10.80. Generally, an increase in volatility is followed by a period of low volatility. The pair may consolidate between the 20-day EMA and $10.80 for a while.